It is Tuesday at 11 a.m. So Tuesday at 11 a.m. we talk everything multifamily. So we definitely want to keep that trend going here today. And so today we got a good one. So we're going to talk about investing in properties and those properties specifically being out of your own market. And so when I got started in this business, I was living in the Washington, D.C. area. A very expensive market. Was really hard for me to even wrap my mind around doing a deal that would cost that amount of money, because properties could be $300,000-$400,000 a unit, right? And so it was a market that was beyond my limits at the time. So you may be experiencing the same thing, and you also may want to invest out of state. So to this day, I'm just now getting to the point where I'm actually buying in the state that I live in. Today, we're going to be talking about that, how you can invest in markets that you do not live at, and how you can understand those markets so you reduce your apprehension with going into some of those markets. So real quickly, name is Jason Stubblefield. If you're looking at my screen right now, you should be seeing our website's homepage. So this is SNScapitalpartners.com. That's like Sam, Nancy, Sam, capitalpartners.com. And on this website, you can find out a little bit more about me. I've invested in apartment buildings since 2016. We've grown a portfolio. It was over 1,000 units before we started selling some things off. We're building it back up right now, actively doing deals. And speaking of actively doing deals, if you are interested in hearing about some of our investments, you can click on the invest tab. That will bring you over to this website here. You can join our community. That will allow you to be in our database, our network, and you can hear about the opportunities that we do. So if you're interested in investing passively, you may want to check that out. Okay. Yes, Irish, I got you. Let me make you a co-host so you can help me out. All right, it's time to fly. I got my co-pilot joining with me, so let's go ahead and get it started. So, when it comes to markets, you are either in a good market for deals, or you're probably in a good market for money, right? And so in this syndication space, there's going to be capital that's raised, and depending on your market, you may be in a good market for either the deal or either the money. So how do you determine that? Right. One of the metrics I like to use is understanding what the national average is for housing. And I think I looked today, it's crazy. It's around $2,400 is what it costs on a national average to rent a single family home. And so if you look at your market where you live at, and you probably know this just because of the cost of rent and talking to your family, but if you want to get technical and put some metrics behind it, if you were to look at the national average on what it costs to rent a single family, and then look at where you stay and say, is it above that national average or below it? That's going to give you a good measure to know, hey, I'm in a market that is higher than the national average, which means the people who live here are making more than most of the people in the country. Therefore, you're in a good market for capital raising, right? There are people around you who are probably high net worth individuals that you can reach out to, grow your brand, your network, build up your investor database. You may also be in a market that is good for deals. And so how do you know that? It may be below the national average, right? The median, well, not the median, but the average home price for a single family will be below what the national average is. And so just using that, you can say, all right, I'm probably in a good market for deals. You also got things that we use like the 1% rule, which say, hey, if you got 1% of the purchase price is what you can obtain in rent, it's pretty good indication that you are going to do well on those purchases. And that holds true for single family properties as well as commercial real estate. So if you're in a market where you can get the 1% rule, drop your market into the chat right now so everybody on here can run to that market, because it's getting harder. It's getting harder and harder to find the 1% rule in any market right now. But they are still there. Ash, I'm in a location that is good for deals. It's really challenging to form a network where the 1% deals come by. Yes, yeah, that's what I'm saying. Like you'll find markets even now with inflation being so high that you may be below the national average, but it's still hard to hit the 1% rule. So the 1% rule may boil down to or come down to the 0.75 rule or whatever it is right now. But it's getting tighter to sort of make deals pencil. Those are just sort of metrics that you can use in order to determine if you're in a deal market or if you're in a money market. If you're in a money market, then you need to start leveraging that network or the capital around you in order to attract investors to you. And then you also need to listen to what we're going to talk about here on how you can invest out of state, right? And so maybe you can take that money and say, hey, let's go buy up properties in a Georgia or Alabama or Mississippi or somewhere where it's more favorable for you. So how do you do that, right? This all starts with building a team. So what we're going to do here today is going to give you a little bit of information about how you can establish a network into another market, how you can become an expert in that market and even know more in that market than the people who live there. And then at the end, we'll go look at a few tools that I use together. These tools are absolutely free. You can use those as you're evaluating markets going forward. All right. So when it comes to building a team, your team needs to consist of a property management company, right? That's going to be first and foremost, right? The property management company is going to be your boots on the ground. They're going to know the market from an experience perspective, right? They've driven those roads. They've operated ideally other properties in the market or the area that you're looking to buy at, and so they're going to be a key player. Property managers are really the quarterback of your deal next to you, right? You're going to be managing that property management company, but that property manager knows about the property, knows about the tenant base, right? They should also have other connections. So you want to start there. You're also going to be looking for brokers. Brokers are going to be sending you those deals in that market. So you need to establish relationship with brokers in any market that you want to get to. And you also want to look for lenders, right? Now, your lender can be nationwide. So this doesn't necessarily have to be someone who is specific to a market, but you do need to understand the lender, right? And depending on the type of lender. So you may look at a national lender if you're doing a bigger property, and maybe you're looking for agency debt, which is like with a Freddie Mae or Freddie Mac or Fannie Mae, get those mixed up. But depending on those guys, they can loan anywhere. But you also, especially in an environment like this where interest rates are crazy, you may also want to look at some local lenders, portfolio lenders, and those lenders will lend more willingly to properties that they know and they understand. So this is going to be the smaller bank, right? The smaller local commercial bank that will lend on this property because they know it and they like it. And why you may want to reach out to them right now is because they may offer you better terms than you can get somewhere else. They're usually a lot more creative. And if you're going that route, that's when you really want to have a lender that is local. But for the most part, if you're using a mortgage broker or if you're using an agency lender, they're going to be able to lend all over the United States, right? So that's part of your team. And then one that a lot of people forget is your tax consultant. And what you want to do is find somebody who does tax appeals. Maybe you can get an appraiser, but you want to have some other professional who's on your team that you can run deals by in order to say, hey, what do you think my tax liability is going to be if I purchase this property at this price? And a lot of people overlook this, and they go into markets and they just they go to the property website, look at a millage rate, see what that is, and they run with it and put it in the numbers. And sometimes it's correct, but sometimes it's not. And the people who make deals work, especially as prices increase, are those people who understand how to do that extra bit of due diligence to get a good grasp on what the future tax bill is going to be after they make the purchase. So you want to build those team members in your market. So where do you know where your market is going to be, and how do you select it? Okay, so let's talk about that. I like to let's start high level first, right? So most of the time you're going to look at a market, you want to know some major some major factors when it comes into selecting the market, right? You want to know where the population is growing and the job growth is going and the median income is rising, all of those sort of things, right? So you want to make sure that you're in a growth market, because that's where the economy is going to work well for you on its own, right? Just because you bought there, it's already something that's escalating. You can just ride the wave of that economy into a good deal or some future equity, right? So looking at those things like job growth, population growth, median household income, home price values, if you see all those rising, that's a good indication of yep, Bo, yep, you know where I'm going. If you see all those rising, right, you will understand that this is just a good market to be in. Now, here's Jason's sort of twist on that. If you go to websites and you look for the top markets, you are running into a market where every other investor who's looking into the same data says this is a great market. So if you choose something like an Atlanta, Georgia, or Nashville, Tennessee, it lights up on these spreadsheets, right? It lights up on the websites where you look for this data, and you're running into a very challenging market because the prices have already been bid up, and now you're coming to that market saying, I want in too. So I apply all the metrics that we just mentioned, but I like to apply them on markets that make sense for me. And you should look at it, or at least consider looking for markets that make sense for you. So how do you know if a market makes sense for you or not? This is where I like to look for properties or select markets based on your personal situation. Number one, what you can choose is just where you live at, right? Because you live there, you understand that market, you know what's happening, you know where the bad side of the neighborhood is, the good side of the neighborhood is, the good schools, the bad schools, you know where there's being development done. So let's just start there, right? And a lot of people, you may not be in one of these hot markets in the Southeast, but you're somewhere else, and it just makes sense for you to do deals there because you got network and it's easy, right? If you aren't in a market that works, okay, and maybe you need to run somewhere else, then where have you lived? Maybe it's where you're from. Maybe it's where you grew up at. Maybe it's where you went to school at, or where you had a job at, because you know the same thing, and you should have some connections that are still there. So I know when I was investing, I started off in Tennessee because that's where I'm from, right? So I was able to call my family, call all the people I knew, and just say, hey, what do you think about this area? What do you think about this market? What's happening? And a lot of times I knew it, right? I could just look at a property and see where it is and say, okay, this is either something that I want to pursue, or maybe it's something that I don't, right? So that's two. One is where you live at currently. Two is where you have lived. Three will be where you have a reason to visit. So maybe you're married and your wife's family is in another place, right, that you don't live in, or you've got a lot of your family and you go visit a place 2 or 3 times a year. Maybe like if you're in the DC area and you travel to Myrtle Beach, or you go to Virginia Beach or something like that, right? That's another indication of a market you may want to select just because you're there. And so you naturally just want to give yourself a competitive advantage on the market that you're selecting. Like, hey, I'm there, or it's not going to be too much of a hassle for me to get there. There's no reason I can think of for me to go to a great market in call it Albuquerque, New Mexico. I don't know anybody there. It takes me forever on a flight. I don't have any competitive advantage. Why go there? And so a lot of people in California, they have this problem because they have to select something else, but you end up just picking a place in a part of the country, and it becomes challenging to do that. So try to get something where you're going to visit at, you have lived there, or know somebody who lives there. And then the last one I'll say is just where you like to be. And if you say, hey, I want to retire in Florida, ultimately, that's where I want to live at and set up shop, and you don't mind traveling to Florida a few times a year, then select a market like a Florida, okay, or wherever you choose to be in Florida. But try to give yourself that competitive advantage. Now, when selecting a market, now that you've used those metrics to sort of select the market, now it's like, all right, now I want to apply the same metrics that we just went over. Which one of those markets? And I would select about 3, right? So say out of what we just discussed, where you live, where you have lived, where your spouse lives, or where you visit, right? You select 3 markets, say, hey, that's where I would potentially be. Now you want to go through those markets and say, which ones has the best job growth? Which one has the best population growth? Where are people moving to? Where is the median household income rising at? And see if you can't get to a better market based off that selection from within your own criteria that that makes sense for you, right? Are we good? Everybody following with me? All right, I got thumbs up over there. Cool. So that gets you to select a market. And then once you select that market, now you want to go back to what I was talking about with building your team. So you boil that down to ideally, 3, 5 at a max, but really like to see that number around 2 to 3. And you want to select only a few markets, because if you've only got 2 to 3 markets, now you can do the extra due diligence when it comes to selecting a property manager and actually communicating with the same person, selecting a tax consultant who knows the taxes in that area. If you're looking all over the country, you got to build that relationship over and over again for everywhere that you go. Same thing with lenders, same thing with brokers, right? You're going to want to focus on the market and then try to go deep instead of wide. All right. So we talked about job growth, population growth, median household income, all those things. Now, how do you find that stuff out? So now we're going to get to what you're talking about, Bo, when it comes to tools and resources that you can use to do this. So we'll start off with one. Let me share my screen here, put this on share. Boom. And so is my screen visible? It is. All right, Bo, you called it with citydata.com. And you mentioned another one, investor-list.com. All right, I'm going to pull that up right now. But let's start with city-data, right? And so this is a great website. It's absolutely free. You can come here and let's just pick on Huntsville, Alabama. All right, so I could come in here, type Huntsville, and this is going to spit out some useful information. Now, one thing you want to know is that populations don't change overnight. Job growth doesn't really change overnight. It's a slow building process. So although the data may be a little bit outdated, you can still use it. And inflation has been crazy the past year or 2. So the numbers are oftentimes a lot higher, especially when you get to median home values and stuff like that. But from here, I could just see that the population in Huntsville, Alabama in 2019 was about 200,000 people. Okay, that's a decent, mid-size market to choose from. You can see the split between males and females. If you are a guy and you're moving to Huntsville, Alabama, it may be a single guy, right? It may be better because you got more females there. So that may be something that you choose. If you're a female, you may want to look for the opposite. But just a tidbit, I threw that in for free. Y'all don't have to pay anything, but for the single people that are looking at this, hey, I'm trying to help you out every way I can. Okay. You can also look at median house or condo values. So you see it's about $185,000. If you want to know what rents are in that area, you can find that out from Zillow. And now you can compare, okay, if the median house value is around 185,000, can I get rents in that single family for $1,800, $2,000, what have you, right? So lots of useful information coming from here. You can also go through here and get into more median household income data with this map that they have here. I like it, but I like another one better, and I'll share that with you in just a minute. So it's breaking down demographics, the various races that are there, and you also get some cool metrics here about the murders, the rapes, the robberies, assaults, all that stuff, right? So you can know all this stuff about a market before you go in, right? And these things are local to that market, but real estate is actually hyper local. So we're going to show you how to drill down to that just a little bit. So I want to so that's city-data.com. And what's this other one that we have here? Let's see what they got on investorlist.com.
Yeah, Jason, check that one out. It's a little little, maybe it's harder to use. I'm not sure, more graphically oriented. And here you can pick, different criteria, search by MSA. There's a number of, you can sort them by different criteria. Yeah, you should be able to.
Okay, so we can get the
Yeah,
same
there you go.
thing.
And then if you click it up,
this,
yeah, you
okay.
can take a bunch of cities, and if you go to the sort by column, you can actually sort by, like, for example, I've used rent to value ratio quite a bit to find those 1%, 2% deals. Two more down, rent to value.
Okay,
Yeah.
I like this.
So it stacks them that way.
Yeah,
hit that and just see what comes up.
Yeah, I like this. I like this a lot. So I'll add this one to the criteria, to our list, right? And so here you got the same thing: population. You guys got population growth, unemployment rate, median household income, same thing, right? So investor-list.com. Definitely want to check that out. And it is aesthetically more pleasing than city-data too. So good all the way around there. So cool. So use websites like that to sort of select the market. And then also you go over and see about crime. So you're looking at a property and you may say, all right, it's a good deal, but does it make sense for you to pursue it or not? And you always want to take into account crime. At least I would, right? You don't want to walk into a war zone. So this other website that we have here is spotcrime.com. And so spotcrime.com will allow you to determine what the crime is in a specific market. So this is apparently, I looked at this property at some point, and you just put in the address and you click search. And so with that, it's going to bring you up this little icon here is the location that you're at. And then it's going to show you the crime around that area. So you can see without ever leaving the comfort of your own home office or your kitchen table, wherever you're at, you can know the home values, the population growth, and the crime of an area without ever leaving the visit. And you can make decisions based on that to see if that's where you want to be. And so in this right here, as a live example, right? I would say that this is not a bad area. Ideally, you would have nothing, right? So there is a theft there and a theft here. But the real things that I'm looking for is obviously you want to get the most safety as possible. But in any city, usually there's going to be a little bit of crime that you're just going to have to deal with.
Do you know if this has a timeline? By any chance, Jason? For example, this is maybe current statistics.
Okay, so when you click on this, you see that, so when you click on this, you see that this was 10/25/2022. So last week, right? And then you can click on more information and it brings you over here and it shows you the source. So you can even go through here.
Yeah, what I really meant is from 3 weeks ago, what did the picture look like? From 2 months ago, what did the picture look like?
Oh, to be able to,
to
see if the crime has changed.
Time machine kind of a thing on this.
Yeah.
It'd be interesting, right? Because then you could sort of detect a trend. I mean, maybe there's an opportunity there for a website. I'm not sure, but for me, that would be really interesting to understand where the trends are. With respect
absolutely. So to be able to see how it's going, maybe it's been a lot of crime but it's trending down, or if it's low crime, maybe it's trending up, and you could use that to your advantage. My thing, I just don't want to be around anything that is remotely dangerous, right? So let's go to, because I live in Atlanta or the Atlanta area, I can just pick some stuff, right? So let's go to this.
Did you move to Atlanta, Jason? I thought you were right here in Virginia.
No, I moved a couple years ago, and so that's why the meetups have been all virtual instead of in person like they used to be.
Because I remember I had dinner with you at one of the restaurants in Northern Virginia just before COVID. So I guess you left us, man.
I did. So different story, right? So now I I select this one and I'm able to see a different crime map. So there's this little red bullseye here, and that's for a shooting. And who would have thought, but Martin Luther King, who Martin Luther King and all Martin Luther King Jr. avenues are really the places you're going to see probably the most crime. But this was off of there, and it holds up to the stereotype. So there's two shootings over here, and I don't want to be close, right? I really don't want to be close to any shootings or assaults. You got to think about it. You're also asking your property manager to come over there. You may want to come visit there. You may want to bring your family over there. And so if it's not a place that you would feel comfortable at, you may want to take heed before you invest there. All right. But this is all data that leads you into other conversations that you can have with your property management company. If it's borderline, but you see things on the crime map, you can ask the property management company about the crime, how that works, if they feel comfortable over there or not. And if it's even more borderline and you really want to know, a call to the local police department will give you just unbelievable data, right? Because they know that community, they know those apartment complexes, and I've spoken with some of them to say, how many calls do you get to this apartment complex? And they know, right? We have to go over there all the time. We got arrests over there, there's vandalism over there, or maybe not, right? So all things to consider as you are considering market out of state. All right, so the last one I'll go is justicemap.org. And this one I like the most, and that's because it is real estate is hyper local, right? So it's not just about where you're buying, but it's also where you're buying on that block or in that city on that block. So let's I can't spell Huntsville. All right, let's go to Huntsville, Alabama. And so with this, this is on a broad scale, right? And so I've selected the income tab, and we're able to see from here that the red areas are going to be the lower income areas. The dark blue is the high income areas. And then it's a scale between the red and you get the orange and the brighter orange until you get to the blue, and the blue gets darker as the income goes up. So what you can do is you can also put in the address right over here. It's going to bring you to a location, and then you can then bring up and see where the income is. So this is more granular data than just being able to say, okay, I know what the median household income is in Huntsville, but it's not the same in Huntsville, obviously, right? And so let's zoom in on an area here, right? So what will happen is I'm clicking here, right? And you see this yellowish orange color here. And this area here has a median income of $57,000, right? Close to $60,000 a year is what people are making over here. Okay, that's a great place to buy at. But there's this highway here, and on the other side of it, there is household income of $23,000 a year. So what will happen inevitably is that a broker will send you a property. No disrespect to other brokers if you're looking at this, but a broker sends you a property, and it's over here in this low income area, and they're going to send you comparable properties that are going to be across the highway into this higher income area. And I'll tell you something, that these are not the same, right? And even though they may be half a mile apart or even a quarter mile apart, right? They fit into what you would call a comparable, but it's different neighborhoods. The schools in these areas aren't the same. The population aren't the same. They don't shop at the same grocery stores. All of it. This is completely different between a $20,000 a year income area and a $60,000 per income area, right? And so Justice Maps allows you to really see that, right? It spells it out. So, okay, if I'm on the right side of this what is this, Highway 72, it's a lot better than being on the left side of Highway 72. And you'll see this. I've looked at this so many times. You see the trends here, right? There's also other cool things that you can see if you go to, what is it, plurality, right? So this brings up racial information. So you can see the dark purple is predominantly white. Like red is predominantly black. And so you can see in these areas, like, okay, this is the, I'm in a Hispanic community, I'm in a predominantly black community. You can take that and, put your own conclusions together about how it happens. But you see sort of this, what would you call it? Just a circle of an environment, right? You're going to see the low schools go with the low wages, they go with the high crime, right? Everything gets negative all in the same place. And you also see the good trends happen together too, right? Higher incomes, better schools, lower crime rates, all that sort of stuff. So that's why I like justice maps. Also, if you want to see, if you go over here to advanced mode, there's income change. And so this is sort of getting into what you were talking about, Bo. You can go just to see the income changes. So blue is going to be areas that there's been a significant amount of growth, right? So even though that's very low income, you see that the income growth over here has gone up. Well, here it's got 50% income off of this data, right? And you see here that some of the income is gone down, right? So this income has changed over here. So you can also take this data and say, all right, well, I'm in a market, but it's trending in the right direction, right? It's growing. So maybe if I want to hold for long term, I want to wait this thing out a few years and it's getting better or it's getting worse, right? Over here, you see a market, it's just been declining, right? It's gone down by 31%. So all of that is good, good information that you can use. And then I think the last one I'll give before we get out here is Great Schools, greatschools.org. I won't go into that. No, why not? Do I have an address already loaded? So you can put in an address and it will show you the schools. And so this was the same address I had saved that was in the lower income and high crime area. And like I said, you can put a picture together just while looking at a market without ever leaving your house. You can see that the schools are rated 1 out of 10, 2 out of 10, until you get to KIPP. And maybe this is a private school or something like that. That's actually a 7 over here. But for the most part, you'll see, yeah, this is a charter school, right? So you see that the charter schools are doing all right, but the public schools are not ideal, right? And so when you have bad schools, that's not going to be able to attract families that are concerned with getting into some of the better school districts. All right. So with those resources, hopefully you got something that you can use where you can sit right there from the comfort of your own home, your own kitchen table, look at how to select the market, right? Go through that process. Hey, where have I lived? Where do I want to be? Right. Then use the income, the data, the growth, and see if those markets make sense. And then as you start evaluating properties, now you can start saying, okay, it makes sense for me to buy this one, or it doesn't make sense for me to buy it. And I do this on every property that we get, even in markets that I know, right? Because you don't know every street, every city. And so what we do is, before we even get into looking at the details of the property information, right? Before I go look at a rent roll and a T12, we're looking at this high level data to see how's the crime and what's the income like, to see if we even want to be there or not. And this will save you a lot of time if you just put in this market research prior to go in, because you may say, hey, I don't want to invest in areas where the median income is $15,000 a year. So you just quickly toss that property, go on to the next one. Okay.
Hey, Jason, I'm curious if you know of a site that I'd been given some advice by a couple of fairly experienced folks who said, look for places where a lot of development is happening, large scale development. A lot of times that's a hallmark because those companies have got, excellent marketing analysis, and they didn't invest $60 million just blindly. They chose that location, right? So do you know of a site that can show, the degree or the intensity of local development going on. That's something I've been searching for. You see why that would be useful. It seems like if you could overlay that on top of all this other data you've been showing this morning, seems like it'd be powerful.
Yeah. I do think that would be great if it was in some sort of website, but I don't know of any like that.
Okay.
I think that speaks to the power of the property management company,
Right.
or
Boots on the
visiting
ground.
places that right?
Right,
Because you've
right.
driven down that road and you see, okay, they're building a new shopping center here, or whatever. And you can also, you don't have to be a rocket scientist when it comes to doing this stuff either, right? If I see a Whole Foods in an area, or
Right.
Sprouts or something that's being built,
Right.
I automatically know if I can get close to that, I'm in a good area, right? Or it's just like those companies, they do all that research, and if you can just tag along with them, or follow and make sure you're not, across the highway from them, use a little bit of the market research that we covered here. But if you can get close, you're probably going to do well, because those companies, they've done a whole lot more market research, and you can just say, I trust you, right? And sort of follow along with them. So good stuff there. Any other questions or comments on market selections? All right, Ash, what do you have, sir?
Yeah, thank you, Jason. It's not about market selection that I wanted to ask. It's about what you mentioned, what things we should be looking for in the market, like, property managers and brokers. How do we start connecting with them? Say, for example, I've lived in, the Boston area in the past. Now, that's not an area I want to get into, because Boston being so expensive, but I've lived there. And despite having lived there for 4 years, I have no contacts. I have no idea how to look for or search, or connect with brokers or good property managers. So how do we do that in a target location?
Yeah, so they're all a little bit different, right? Lenders is going to be easiest. Okay. Property managers, you really want to get recommendations. So I'm glad you brought that up, because I did have that in my notes to talk about, but I didn't, right? So one of the websites I like to use is biggerpockets.com. And so I'll go to BiggerPockets, and you can search by area, you can search for property managers, and you'll get a list, right? You'll see threads of conversations that have already happened. Also, I like leveraging other multifamily real estate groups, like Facebook groups. There's one called the Multifamily Code that's pretty good, where you can go in there and ask people. Shameless plug right there. It was bad, Jason. But anyways, I did it. So you can go in there and to these various groups, and there's other people who are doing deals, and just say, hey, does anybody have a property manager? Also, LinkedIn has groups, right? So just immersing yourself in areas and communities, online communities, where people are doing the same thing that you're looking to do, is going to be a lot of help when it comes to building out that network. And that's something that I've done. If you just go to Facebook and type in multifamily, you're going to see a lot of Facebook groups. Join as many of them, join all of them, and then just go in there and post a question, and there's plenty of people who are willing to give. So that's something that I use when it comes to building that team. Brokers, I did do another training on how to get connections with brokers, because that's a little bit more challenging. Usually the commercial brokers aren't as accessible as everyone else is. So Michael, you missed the entire Zoom. All right, everybody, we're starting over. So today, anyways, Michael, we'll get you the recording, my man. So we'll make sure you got it. Where was I at? Yeah, basically just brokers are a little bit more challenging, right? But you can use websites like LoopNet and Crexi to understand who the brokers are, and then you reach out to them and try to establish relationships. Okay.
You can go on apartments.com or apartmentfinder.com, and apartments near you, and you can find out who the property managers are, and you can read the comments and see what they say about that property management company, because sometimes the information you can find out about a building, you'll get more from apartments.com comments and apartmentfinder.com than you will from your broker about what's really going on in that building. Some of them are outdated, people don't comment, but sometimes there's some pretty, and you can also tell that hey, it's got all kinds of water leaks because there's 10 complaints in here about water leaks or whatever, right? Or crime, or I mean, some of them are pretty amazing that people actually write what they write yeah. So scare you away from the property, just, or make you at least have further questions to ask your potential property manager about that issue. And if it's the same property manager, if you're planning on keeping the property manager that's already there, that's a good way to do some preliminary investigation on them for that particular building. But doesn't always work, but sometimes it can be quite enlightening. I will say that.
Yep. Yeah, that, and just I know when we're analyzing property, sometimes we'll just Google it and you can see the reviews there, and you'll find out all types of stuff: bed bugs, roaches, rats, all that stuff.
Yeah.
You just read through the comments on there. So that's helpful. All
Yeah,
right.
when you visit the property, try to go there without the broker or the property manager, and just pull in like you're looking to rent an apartment and talk to people and ask them what they like about it, what they don't like about it. Kind of like a secret shopper or whatever they call it, right, Jason?
Yeah.
You can get a lot of information from the tenants. Yeah.
The closest gas station. This is another gem, right? We'll throw this in. But if you can go to the local gas station, 10, 11 o'clock at night, that's your community, right? That's what you're essentially buying into, right? So all that just sort of intuition type data, right? That's just as valuable as this stuff. The thing of it is, you can't get it all if you're not there, right? So if you are, at hundreds of miles or plane ride away, you can do all this stuff online. And then if it warrants you to go there and visit, then you can do some of the we don't need muggers going on at gas stations. Yeah. I mean, that's true. But if you want to go visit, then you can do some of these things, right? While you're there, hey, let me drive to the local gas station, late in the evening. Let me go see what the grocery store is like, stuff like that. So good deal. To everyone who joined, I appreciate you. I thank you for taking time out of your Tuesday. Hopefully you found this stuff valuable. Let's see, snscapitalpartners.com. If you want to hear more about what we're doing, join our investor club. Also, if you're looking for help and you are trying to advocate and buy multifamily properties, then reach out to me. We can have a discussion about that. All right. Other than that, make it a great day on purpose, and I will chat with y'all later on. Take care.